right, welcome everyone. We are going to be going through some tax items today,
Yes.
some key dates, key figures, key tax pieces that you need to know for 2025. We're going to dive right in, starting with the big pensions, CPP and OAS.
Yeah, so if we start looking at it, the annualized CPP inflation rate as of January 1, 2025 is increasing to 2.7%. That's what we're dealing with. Now, the changes that are coming into CPP, of course, we started inaugurating these a while ago. Phase 2 is now implemented. So for that first ceiling, contributions are 5.95% from $3,500 up to about $71,300. And then that second ceiling, if you're earning more than that, kicks in from sort of $71,300 to $81,200, or about an extra $10,000, at which you're paying 4% going into that scenario. So that's the first thing on CPP. OAS, on the other hand, not too much. Of course, it's quarterly adjusted for inflation. 65 to 74 years of age, you're getting that 727, 67. And over 75, of course, it's a little over $800 you're going to make. But of course, that's on a quarterly basis. So that's the October to December 2024, and it's adjusted every quarter.
Yeah, and those are the maximum for OAS. Most folks get the max when it comes to old age security. That gives you an idea what the maximum would be. And then, of course, unfortunately, there's the clawback. You make too much money, the government takes away some of your old age security. That clawback threshold does get adjusted regularly. Currently at the $90,997, it's about 91 grand is that threshold for the clawback. And as Kevin mentioned, those numbers do change quarterly. So it's not as if they'll be the same for all of 25. They'll get adjusted every 3 months throughout the year. Also, unfortunately, there's a new tax. It came in June of 24, but this will be our first full year
on it
under the new capital gain system.
Yeah, and basically what we're dealing with now is that what they brought in is if you're an individual, basically your inclusion rate up to $250,000, it's still that 50%, but you get anything over $250,000, now that amount is taxed at 2/3. So that's a per individual threshold, or should I say that's an annual threshold per individual, and the higher inclusion rate only applies once you get over. So you can get up to 250 without a problem. It's only over that it's taxed at 2/3. Everything below that is there. And of course, the unfortunate part is corporation and trust. It's now implemented for everything from $1. We're not dealing with that 250 at all.
Yeah, corporations trust got the short end of the stick there. Every single capital gain starts with a 2/3 inclusion rate, whereas individuals still have 250 of the old rate before the new inclusion rate applies. Talking taxes, the tax filing deadline for 2024 personal tax returns, because remember, we always file for the year prior. So in April of 25, we have to make sure those 24 taxes are done. Date is still April 30th, 2025, when you have to have your 24 taxes complete. Also, a few more dates, talking contributions here. We're going through some dates and some limits for the RRSP. For those that still contribute to RRSPs, you get 60 days into the new calendar year where you can make a contribution and use it on the prior year tax return. This time, March 1st actually fell on a Saturday, so they gave it to the next business day. So March 3rd, 2025 is the last day you can make a contribution to your RSP and use it on your 2024 taxes. RSP limits, it does vary. Everyone's going to have a different limit. There's a whole formula there. It's 18% of the prior year's income with a couple of adjustments. Up to a maximum of $32,490, but there's carryover. So if you didn't use prior years, it'll keep accumulating. And your notice of assessment is where you'd want to look to see what your specific number would be in terms of contribution burden.
Yeah, and then when we're dealing with the other options, there's the TFSA scenario, which of course, it's this year set at $2,000 or it's $7,000 again, same as it was last year. It's inflation adjusted. So if it goes to a certain point, they'll add another $500 from there. And the FHSA, as we mentioned, is $8,000. That's continuous going forward. There's nothing that's been changed, but again, inflation can have effects on what's going on. When we're dealing with that one, another area that we have to start to look at is the politics. And it's not so much politics because of what's going on, but policy change, correct?
Correct. Yeah, we don't encourage anyone to make big changes to their financial plan or their investments based on any kind of political decision. Often the political decisions have less of an impact than we think when it comes to markets and financial planning, but it can change policy. And there's going to be a new administration in the U.S. and U.S. inauguration of January 20th, 2025. And then here in Canada, there is going to be a federal election. That's just simply the way the rules work. Federal election, based on the Canada Elections Act, are required to take place in a certain time period, and that will fall on Monday, October 20th, 2025. So at least by that date, there'll be an election. It could be earlier. Who knows how the politics happen? But those are some things to keep in mind. If you're watching pensions, if you're watching policy changes, sometimes politics can influence that. We had lots of questions, which is how we put this video together.
That's right.
Get a few dates and figures to answer some of the questions we received through our website. If you have a question, Kevin, how do folks get a hold of us?
Go to chatwithclintonandkevin.com. By all means, anything you want on the key dates, or if there's anything you want to know about what's coming up in 2025, we can give you the answers to that, or any other financial matters that you have. We'd be more than happy to try and answer your questions the best of our ability. It will go to Clinton and myself, and we will get back to you in a timely manner without a problem there. But if you want it, you can get it through the website as well. And there's also something new on the website.
There is a newsletter. So if you like videos like this with financial tips and financial knowledge, we have a newsletter. It comes out weekly, similar type of content, so you get even more information. Also, we do free webinars every now and then.
We do.
And the folks on the subscription list for the newsletter, that's who we invite to the webinars. So if you want the newsletter, go to beckerorr.com. You can sign up right there for the newsletter. Talking changes, key figures for 25. Interest rates were a big story last year, at least for the last couple of years. Likely still going to be a big story and a market mover in 25. So let's look at some of those dates that could impact interest rates.
Yeah, and I mean, interest rates, as you mentioned, have a big factor is how the markets move, how everything goes on a GIC basis or things along those lines. Traditionally, the Bank of Canada and the Fed sort of follow a 6-week scenario. So every 6 weeks or so, they come out with their rate announcement, whether it's positive for a cut or moving up for an increase in interest rates. Sort of starting in 2025, you're going to see it coming the end of January, sort of the middle of March, April, June, July, September, October, and December. Dates will vary within that, but it's usually around that sort of 6-week to 7-week time frame. The Fed, similar sort of scenario. They usually tend to be maybe a week or so later than what we are, and then they follow that same sort of suit and come all the way through on that.
Yeah, so little nuances here. Bank of Canada always meets on a Wednesday for some reason.
Yes,
That's
they
the
do.
day for the Bank of Canada, Wednesday. And then 8 times during the year. The Federal Reserve always does 2-day meetings. They have a meeting, then they do a press conference. It's a whole thing. Again, 8 times during the year. And the dates are usually somewhat close together, often within the same month. But if you're watching interest rate moves, those would be the dates to keep in mind. A little nuance when it comes to rates. The Bank of Canada, the Federal Reserve, they really set the short end of the curve. So they influence short-term rates the most. The bond market usually front runs what happens there, which means bond market will move based on expectations. If traders think a rate cut is coming, they'll price it in before the rate cut actually happens. And then often banks and credit unions will set their rates following the bond market. So the exact date of the central bank meeting might not line up with when you see changes in the banks and credit unions, because the markets often anticipate some of the cuts that are coming. So you have to keep all that in mind. If you like this video, we talked briefly about CPP and the changes in 2025. We have another video that dives in deep into those CPP changes in 2025. Click on that one. We'll see you again very soon.
Take care.